Welcome traders. Here is another update. See, in our previous video, we have already discussed that there is a good probability that this might be the end of wave 4 correction, which was continuing from this date, that is from 30th June. This was a bigger correction in flats, and here is the marking from these low. This is 1, 2, 3, 4, and 5. One may also argue that this may be 1, 2, 3, 4, and 5, and A, B, C should have been there. But market didn't given that, rather it given a flat correction. It may be possible, but for wave 2, the retracement level was much deeper, which we have expected earlier, but market never broken this level and bounced from here. So from this perspective, we have changed our count, relative count. That is, we have changed that this might be wave 3, and the whole thing is wave 4, which I have marked is as ABCW. This is X, and again ABC to complete the Y. So this is the connector. Fine, so far so good, and market started bouncing from here with an impulsive nature. Now the problem arises that if we find out if it is wave 3 and if it is wave 4, then the minimum projection level of wave 5 is 38.2%, and that market has achieved. And market has started correction from these zones. Fine. But now, if it is wave 5, the question comes that it must be of 1, 2, 3, 4, 5 nature. But here, see, this is just wave 1, wave 2, wave 3, then wave 4 has entered the zone of wave 1, which is not allowed in Elliott wave. Okay, so if it is 1, it is 2, and it is 3, then this is not the 4. 4 should have never come below these wave 1 level. So how to change that? So what is in store that we want to analyze? Fine. So what is in store now? Since wave 4 has entered here, now we may assume we'll analyze these in two perspectives, that is for bullish scenario and for the bearish scenario. Okay. For the bullish scenario, let's start with the bullish scenario first. For the bullish scenario, it may happen that this is 1, this is 2, and this is 1 of 3, and this is 2 of 3, and 3 of 3 may start from this low. In this case, this swing low is very, very important for the market. That is 25,061. If this low is broken, then expect a very, very deep correction that I will discuss for the bearish scenario. But for the bullish scenario, market must preserve this low. Okay, so this low must be preserved by the market. Okay, now for the bullish scenario, see, from here market has given an impulsive move. Now market must break this resistance level. This is the most important resistance level for the market now, and market must break this resistance level with fast nature. Okay, please keep in mind the nature, because the character of the wave is very, very important in wave theory. Because see, we are expecting this is 1 of 3, this is 2 of 3, and this is 3 of 3. That is most powerful wave, and since it is the most powerful wave, it should move with gaps and in fast nature. Okay, expect very minimum retracement if it manages to break and closes above this level. Otherwise, let's come back. So this is the bullish scenario. This is for the bullish scenario. For bullish case, these low must be protected. And if we come back to more smaller frame, then what is our immediate support? The immediate support is coming around 25,400. Okay, because from here you can mark it as 1, 2, 1, 2, 3, 4, 5. So this is 3, 4, and 5. Okay, so we may expect an ABC move whose maximum retracement can come to 25,400. So in Monday, we can expect a pullback and a buying, intraday buying should come from this level. And if it breaks this low, then market is in real danger. Then market will go straight up to this level. Okay, then this is the support area. So if you go long from this area for bullish case, then please maintain this as your strict stop loss. Okay, fine. Now let's move on to the bearish case. For the bearish case, see, for the bearish case, we may consider that this is actually the end of the impulse from here. 1, 2, 3, 4, and 5. Okay, and then this is the part of an expanded flat correction. That is, this is the first leg, this is the second leg. So A, B, and C is in progress. Okay, for this view to work, the immediate level which the bears should defend is this zone, and the final zone is final level is 25,816. If price breaks these with gap up, then clearly expect that this downtrend has completed and we are in a furious upside move. Okay, so in this case, bears must resist this level for next low. So in that case, this will be 1, 2, 3, 4, and 5. 5 will come here, and this will complete the first impulsive wave, that is 1, 2, 3, 4, 5. Then expect an ABC pullback, and then the bigger C wave or wave 3 of this downside impulse will start. So in that case, this is the probable part for Nifty. So in any case, market is in a very critical stage. Please trade with very strict stop loss and execute your trade only in your zone only. Okay, so that you will get the minimum risk reward for this. And I have also curated some time cycles for you. These are short-term intraday cycles, and these should give us the pivots which we need. And these date 14th November and 11th November, these are very important. Okay, so let's see what market has in its store. We are prepared with our levels, and we'll meet in midweek If any critical update is necessary, I will update it on Telegram and in my Twitter handle. So please follow and subscribe to my social media handles to get the regular updates. And happy trading and trade safe.